Welcome back to my channel, guys. So today we're going to talk about ETNs and ETFs, which are exchange traded notes and exchange traded funds. These two are the types of investments that I talked about back in my first video. If you haven't watched my first video, please go back, guys, and watch my first video. Don't forget to like, don't forget to comment and subscribe, so then you will come back to the second one. So before I talk about that, I want to answer some of the questions that people kept on asking me. So the first question was, how long are the investments and what are the returns? So there's no specific period of time that you can hold on to your shares. It's all up to you. You can hold on to your shares for 5 years, you can hold them for a day. So if you feel like today I'm gonna buy the shares and then later on before the market closes you're gonna sell your shares, it's all up to you. But just consider the share price. If the time you bought the shares, how did they appreciate or did they depreciate? So consider that as well, so that you can get the gains, or if you don't consider it, you're gonna get a loss. That's just how it is. And then what are the returns? There is no fixed amount of return that you get. The return, it depends on the share price, guys. If you have bought your shares when they decreased, it means that maybe if today they have appreciated, that is your returns. It's just the difference between the selling price and the buying price. So it's all about the gains or the losses. That's just it. So back to ETFs and ETNs. So I'm going to start with ETNs, which are exchange traded notes. So these are the unsecured debt securities that track an underlying index. So what an index is, it's a hypothetical portfolio of investment holdings that represent the financial markets. So back to ETNs that I've explained. Index, that was the explanation of an index. So back to ETNs. So ETNs are called unsecured debt security for a reason. So if the company that you have bought the ETNs from goes bankrupt, it means that your money goes with the company and there is no guarantee of your money back. So that's the risky part of ETNs. So when you purchase an ETN, you purchase a commodity, such as gold, such as copper, palladium, wheat, corn, and all these other commodities you can think of. So that's when you purchase an ETN. So an ETN, it's like a bond, guys. So what a bond is it's like a loan. You loaning money to either a government or a corporate, because those are the types of bonds. So they are, there's a corporate bond, there's a government bond. So say that a government is in need of 5,000 rands and they issue a bond and they say this bond, we need 5,000 and it's gonna last for 5 years. So you buy a bond. It means that each and every year for 5 years you're gonna get an interest of your 5,000 each and every year, and then when the maturity date comes, they're gonna give you the interest. Maybe they said the interest, it's 2%. You're gonna get the 2% of the 5,000 plus the 5,000 that you have borrowed them on maturity date. So a bond and ETN are the same, but they differ when because an ETN, you don't get an interest every year. That's, you just don't get an interest every year. You only get your money at the maturity date. So an ETN has an ETN and a bond, they both have maturity dates, unlike a normal stock. So that's all about ETNs. So ETFs are exchange traded funds. So what this is a pool of investments. Let me say a basket of investments. It's like putting your eggs in one basket, but different colors of eggs, guys, different colors, not the same color. So this means that in your basket you will have your commodities, you will have your bonds, you have your normal stocks. So they created this for you to have a lower risk of losing your money. So in your basket you have commodities like gold, copper, the ones that I explained. You have your bonds, either a corporate bond or a government bond. You have your normal stock, normal equities that you buy. So an ETF has a low risk than normal stocks. But the drawback of an ETF, no, not an ETF. The drawback of an ETF is that no matter how high the dividend is, it will never go as high as a normal stock. This is because the risk is low. So if the risk is low of an ETF, it means that the dividend is also going to be low. So a high risk equals high returns. That's what it means. So you will never get high dividends like you on an ETF that you get when you bought a normal share. So ETFs are like mutual funds. So what a mutual fund is, it's a fund that you go find a fund manager, and this fund manager is the one that's gonna take care of your investments, that is the one that's gonna track your investments. You don't have to do anything. All you gotta do is pay a certain percentage to this fund manager to look into your investments regularly. So a mutual fund is not as flexible as an ETF, because with an ETF you can sell and buy anytime you want in it. It can be twice, it can be 3 times, it can be 5 times, it doesn't matter, but it's that flexible. But with a mutual fund you can only sell once, or you can only buy once in a day. So mutual funds are not as flexible as ETFs. So ETFs, they also have lower fees. Usually they have lower fees than a normal stock, which is good. They have lower fees than mutual funds. So mutual funds, they have high fees. They're not as flexible as ETFs. So if you want to invest on your own and check your investments regularly on your own, you can purchase an ETF. But if you don't want to keep on checking your investments regularly and tracking them how they are going, then I suggest that you go and purchase a mutual fund, because someone will be there for you to manage them and see how they are going, and then they will give you a feedback of that. But a mutual fund comes with a lot of costs, because maybe the fund manager will say, all of your investments, you're gonna give me 1%. We know that 1% is like that's nothing, but as your investments keep on growing and growing and growing, you will see how much you are going to lose after giving that 1% to your fund manager. So I'd rather purchase an ETF because it's flexible and I can passively manage it by myself. So those are the 2 types of investments I wanted to talk about: exchange traded notes and exchange traded funds. So if you want to learn more about them, guys, I suggest that you go and research them for yourself. It will be good for you if you want to purchase either one of them. So go inside, do your research. That would be good. And guys, I can't always answer all of your questions. I can't tell you where to invest your money at. I'm not a certified investment analyst. If you want advice, I suggest that you go and look for a certified investment analyst or just a financial advisor to advise you on where to put your money. But I'm not a financial advisor, so I can't tell you where to put your money at, because I don't know what type of risk you're looking for. There's a low risk investments, there are moderate risk investment, and there are high risk investments. So I can't check all the companies fundamental analysis and then come back to you and tell you, do you know how many companies are listed on the JSE. So I suggest that you look for an investment analyst or a financial advisor. I recommend you do that. And guys, today it's the 1st of May, and in South Africa there are going to be elections on the 9th of May. So be careful when you're investing this month in May, because the market is going to be so dramatic. They're going to be investors who are going to be pulling out their shares. They're going to be investors that want to invest in other companies. The bid and ask spread is going to be so high, and it's risky when you're going to invest your money this month. So just be careful of investing this month if you do want to invest this month. And Easy Equities sent me a message that from today until the 8th, they will be the JSE will be closing the market, and then on the 9th, that's when it will be opening the market. So if you were thinking of purchasing shares this week, just know that the market is closed. It will open on the 9th of May, after the elections, or the day of the elections. Yeah. So let me wrap this up, guys. So ETNs and ETFs together, they are called exchange traded products. This was developed with the goal of creating flexibility with these products. So unlike mutual funds or a bond, these products give you a lot of flexibility. When you want to trade, you can trade anytime you want, just as long as the market is open at that time you want to sell or you want to buy an ETN or an ETF. So that's just about it, guys. So guys, thank you for watching. Please subscribe, like, and comment, and tell me where you don't understand, and I think I will elaborate more on that. Thank you for watching.